the 10 plus BTC wallet started going nuts and accumulating rapidly, which resulted in this big price gain in these dark green bars. And even when we started to flatten out, this is when a lot of people panicked because the whales were not as active. They were taking a little bit of a holiday break near the end of 2024. And then right around mid-January, just a few days before Trump's inauguration, that's when they started to pick up steam, and they have not really stopped.
Hey everybody, welcome into the Thinking Crypto podcast. I have Brian from Santiment with me, and you guys know we're going to do a deep dive into the data around Bitcoin and altcoins and what's happening with the market. Because Brian, we've had incredible volatility over the past few weeks, tons of fake outs, tons of macro factors, DeepSeek, tariffs, you name it. And it seems people are really worried right now.
It does seem like that. Yeah. Based on data right now, it looks like a lot of people are kind of sitting on their hands and being very cautious. Bulls are kind of quiet, but bears are also kind of quiet. Usually one or the other is kind of getting vocal. And we're kind of sitting in the middle now as people are jaded by this back and forth roller coastering between the 92K to 108, 109K level from the all-time high we just had 3 weeks ago.
Yeah. So maybe let's start with Bitcoin and the sentiment around Bitcoin. What are people saying? How are they feeling? To your point, there seems to be a bit of hesitation around what may happen next. And people are not sure if we're going to go lower or we're going to bounce at some point.
Yeah. I mean, we look at the past week of returns and they're kind of all over the place. Obviously, Bitcoin's the one we usually want to start with. And it's down 1.5% in the past week, pretty much even. You can see Litecoin, the big story, up 16.5%. But most of these altcoins, especially as you go further down to the mid caps and the lower caps, the bleeding kind of gets worse and worse. And that's normal when you see a bit of a retrace and the end of a bull cycle, which many kind of believe we're in at this point. Even though it's only been 3 weeks since an all-time high. So that's weird to say, but it does seem like there is a changing of the perception from the crowd right now. And they are a lot more negative overall than we've seen in a long time. They get jolts of positivity when we see a big bounce or Bitcoin goes over that psychological resistance level of 100K. But from a weekly basis, many more negative comments are flooding in compared to positives. A lot more like what we saw in the summer, like May, June, July, when we started to really drop from that then all-time high of 73K or so. And people were panicking and thinking we were going to go all the way back down to 30, 40, which obviously never happened. So yeah, from a weekly perspective, we just see a lot less discussion. And when there is discussion, it's a little more frustration than we've seen for the past 6 months or so.
Yeah. And it's funny, the market can play with your emotions, put you in that meat grinder, right? And people get bored, they get shook out, right? But the point is to watch the data and not get shaken down. And to hodl as much as possible. And if possible, buy the dip, not financial advice, of course.
Yeah, no, that's well said. It's the toughest part of crypto is to not jump out when you get this itch to just take the money and stash it in your bank account. Because historically, at least in the past 15 years or so, that's not been the right option. You want to keep it in crypto above just about any other investment out there. And the temptations that are going on, excuse me, as I clear my voice, the temptations are going on, making it very difficult to just ignore that itch and want to take it out. But one of the main validations that we're looking at is the 10 plus BTC line, which continues to show accumulation happening right now. I can even zoom it out to make this line look a little more prominent. You can see right around mid-October is when the 10 plus BTC wallet started going nuts and accumulating rapidly, which resulted in this big price gain in these dark green bars. And even when we started to flatten out, this is when a lot of people panicked because the whales were not as active. They were taking a little bit of a holiday break near the end of 2024. And then right around mid-January, just a few days before Trump's inauguration, that's when they started to pick up steam, and they have not really stopped. So, if you are hodling right now and you're getting that itch to take it all out or half of it out, just understand the whales are continuing to give bodes of confidence in crypto overall. And remember that Bitcoin is going to be representative of every other coin out there, because Bitcoin will go up in bursts. And after those bursts, that's when all the profits get redistributed to altcoins.
Yeah, absolutely. And this is a metric we followed for, since how long we've been doing this? Over a year? Yeah. And we've seen it play out to a T, that the whales are confident. Yes, to your point, there's points where they slow down and things plateau a bit, but they are not dumping, they're not selling, and they still see further upside here, and they're accumulating.
Exactly. And like these are the divergences that we're talking about. When you see price go like this and accumulation is still going, roughly like that, those are the dip buy opportunities that you can really take advantage of, because price goes down, whales add more of those cheaper coins that are being hemorrhaged by the panicked retails, and then they just send prices right back up. There's no guarantee it's about to happen like today or tomorrow or sometime this week even, but given enough patience, prices generally will start to go in favor of the direction the key stakeholders are trying to take it.
Yeah, for sure. And Brian, I'm imagining you and I, maybe 6 to 8 months from now, we're looking at this chart and we're seeing a downtrend, and we're like, it's probably time to exit the market.
Exactly. Yeah. I mean, there are moments where this line goes down. It's not just, we're not just parroting the same information week after week because this always happens. Like 2022, the line was going just the opposite direction. I'll even show it. Many who were in crypto back then will remember that there were, interest rate cuts galore that were impacting prices. Let me get this axis right. I'll just take the limitations off here. There we go. So yeah, this was 2022, especially the end near the FTX collapse. Of course, it went down, but going back a little further to the beginning of 2022, it was already happening. So like, we were telling people during this time on our own videos on our channel, like, this doesn't look good, guys. Like we're seeing a lot of concerns regarding interest rates and regarding not just the economic situation not being good, but key stakeholders also believing the economic situation isn't good and exiting themselves. And without their liquidity and their capital being able to keep markets afloat, we could see a big collapse. And of course, good old Sam Bankman-Fried just accelerated that because they were up to some nefarious things that were negatively impacting prices as well. But you'll see another point, whether it's a year from now, 4 years from now, there's going to be another bear cycle at some point. I don't see that as right now, though, based on the data continuing to show confidence from those whales. So we'll leave it at that.
Yeah, for sure. Now, on the ETF front, I noticed there's been a bit of a mixed bag. Fidelity has been selling off a little bit, but nothing crazy. BlackRock continues to accumulate. What are you seeing on your end?
Yeah, so we can start with volume and then look at a few individual ETFs to see the inflow and outflow. We did see this huge spike right after Trump was inaugurated. This is on like a UTC time zone. So I actually, I'm highlighting this. It's actually January 21st. So it was the day after his inauguration. Just the 7 largest ETFs alone had a combined $7.9 billion in volume. And that was the single biggest day that we had seen since March 13th, which was either the day before or like the day of the then all-time high of like 73K. So long story short, volume is looking fine. Yes, we've declined a bit since that inauguration, but it still looks relatively okay. This is the current day, so we'll give it a little time. The bar might catch up. And it's still looking better than it was throughout the summer, especially like beginning early May all the way through right before the bull cycle, which was like right around the 13th or 14th of October. It was really low, and we're not that low yet, which is a good sign. So ETFs are still seeing plenty of volume overall. But when it comes to inflow, outflow, which is arguably the most important part of this, we can look at things like IBIT, which was seeing a lot of outflow at the end of the year. And not coincidentally, this was when prices were kind of starting to struggle. I think there was this big local top on like December 20th. And the ETFs were actually seeing a lot of outflow right about at that time through mid-January. And then we got that big pickup in crypto markets again in the days right before Trump's inauguration on the 20th. So after that, we started seeing big inflows again. And other than what this was Friday, it's been mostly money moving into IBIT ever since. FBTC, kind of more of a mixed bag. A little bit of inflow, a little bit of outflow. This was actually a pretty big day, a few days after the inauguration. Another mixed bag for BitB, which is seeing a few big days. This was the inauguration day, and then some outflows. Yeah, HODL, this one looks more positive. A few outflow days, but I see much more inflows than outflows. So yeah, I mean, those are just 4 or 5 of them that we could check, and I see a little more inflow than outflow. But combine that with still pretty confidently high volume for ETFs, I think the picture looks fine. I'm not too worried about ETFs painting a picture of a bunch of money exiting and foreshadowing some fall that none of us are seeing.
Yeah, agreed. I would say this is like a very, if not secondary, tertiary metric to gauge what's happening. I think the wallet and supply and exchanges and even stablecoin liquidity are better metrics. And then I mean, it goes without saying ETFs rebalance at certain points in a year. So at the end of the year, certain clients may have said, hey, I want to take my profits.
Great point.
And it could happen around tax season, right? This is how these ETFs work.
Yeah, and especially in 2024, that was a profit year. I mean, almost everything that you were investing in, gold, silver, crypto, stocks, they were all up significantly. So that's only going to increase the likelihood of people taking out money at the end of the year just to get their, net profits and expenses exactly the way they want, even if it means buying back in right at the beginning of 2025. Like, that's a strategy that many wealthy capital people are implementing. And we kind of talked about it on one of our videos, actually, like in mid-December. Like, don't be surprised if you see a little bit of exiting. It might just be a temporary thing, but this was a huge year, so it very likely will happen. And it did.
Yeah, absolutely. Now, as far as talks of price, that's something I think we want to highlight. What are people saying? Are they saying things are going to go lower or higher?
Yeah, thanks for bringing this up. So we were talking right before the call about this fairly new chart that we have been experimenting with, and we've touched on it a little bit in previous calls, but this is probably one of my favorite things to measure the social sentiment at this time. You basically take whatever Bitcoin's price is now, and you go anywhere 5 to 10% below the current price and anywhere 5 to 10% above the price. In this case, we're putting in blue bars mentions of Bitcoin at 90 to 95K. And when people talk about this more, it may be because it's very close to that price or even entered that range for a short period of time. But the most important times are when we're not quite at that price and people suddenly speculate about really low Bitcoin prices all of a sudden, that means they're getting bearish and they're like targeting, buying at 93K or something because some TA they did showed them that that's the time to accumulate a bunch more. Alternatively, if they start mentioning high prices, especially ones that have never existed up to this point, because our current all-time high was like 109.2 or 9.3, if I'm not mistaken, Tony. If you got a 110 to 115K and you're seeing a lot of discussions around that, it's a pretty good sign that people are getting that FOMO itch and talking about a profit taking spot for themselves. And this is going to be a sign of greed. So we're kind of working around the more traditional mentions of just buy Bitcoin or sell Bitcoin. And we're looking at actual price predictions from the crowd to get a good grasp of how scared or greedy they are at any given time. So long story short, when you see these big red bars, that's an indication that they're getting too daydreamy and we're going to see a top. We kind of saw a short-term one here and we saw an exact perfect top right here when this one happened.
Interesting.
We then saw on Trump's inauguration day, everyone's talking about 110 to 115K Bitcoin again, and the price tops the next day and falls significantly. As of now, there's not a lot of predictions in either direction because, like I said at the beginning of the call, people are just sitting on their hands and they're a little afraid to make the wrong move because they've seen so much volatility and roller coastering of prices in both directions. So maybe a little bit of bias toward the high side still from what I'm seeing, because almost no discussions of 90 to 95K Bitcoin are happening right now. But it kind of looks like it's a little bit of analysis paralysis right now from traders.
Interesting. It's so funny how this thing, the data and people's emotions and psychology plays out to a T. It's fascinating.
I know. It's kind of like we're just looking at ourselves, like the social media in like a giant fishbowl and being able to extrapolate how people feel just from zeros and ones on a computer. It's crazy that we can do this.
Mm-hmm. And then the other thing I wanted to look at, which we've been taking a look at, is stablecoins and minting of USDT, USDC, and how that's looking.
Yeah, we can start with just the overall supply and exchanges. So we're looking at the percentage of Bitcoin that exists and how much of those existing Bitcoin are on exchanges. It's still looking really good. So this is another good long-term sign, in my opinion. If we go back 6-ish months ago when it was at its high point, 16.6% of Bitcoin was on exchanges. Now it's 7.6. So more than double the amount of supply that was on exchanges is now off exchanges. That's a very good sign. It means people are hodling and sticking with Bitcoin for the long term. There does come a point where Bitcoin's supply on exchanges is so low that there's not a lot of circulation, but it still seems like the network is fairly healthy in that regard. So I'm not too concerned about it. And then transitioning to stable coins, I specifically highlighted the top exchange addresses. So when this line is going up, that means the exchanges are getting wealthier and wealthier with stable coins. And that's a good thing because more stables on exchanges means there's more ability to convert those into Bitcoin, retail's being able to buy. So exchanges in their liquidity pools are staying very high with the assumption, and the volume is probably backing this up, giving them the reason to do this, that people are going to buy more. And obviously this contributes to users' stablecoin wallets as well. There's some huge whales who keep their stablecoins on exchanges and have been moving them to exchanges for the purpose of buying more whenever the time feels right.
Yeah, absolutely. So it looks like USDT continues to rise. USDC seeing some rise, but some chop.
Yeah,
Excuse me.
two different stories for sure. USD coin isn't looking nearly the same, but at least it had this run up in November that hasn't gone back down yet.
Mm-hmm. Very interesting. All right, let's talk about altcoins and what you're seeing on that front in addition to meme coins.
Yeah, there's a few we can talk about. We talked before the call, Tony, about XRP and Solana, if I'm not mistaken, right?
Yep.
So we can start with XRP, which we have plenty of on-chain metrics for. In terms of utility, things have kind of come back down. There was this huge spike at the beginning of the month. Obviously, it's still one of the best performers over the past 6 months, mainly due to this huge run up during Trump's election and all the way up until early December. And then they had this second run up here in mid-January. But yeah, transaction volumes kind of come back down to earth. Same with like daily active addresses and circulation. They're kind of back to neutral. Not necessarily a bad thing. It just means that the hype has kind of died down a little bit. And then the big thing that I'm looking at here is how are the average returns for any average wallet that's been active in the past 30 days, which is what the orange line shows, or 365 days, which is what the teal line shows. And it's kind of a mixed bag because due to this big retrace, we've seen the shorter term traders that were kind of FOMOing in here, they've gotten crushed, and that's resulted in a minus 13% return for any wallet that's been active in the past 30 days. That's a good thing for you if you're looking to enter XRP at a historically advantageous time, because you'd be buying into others' pain. And if I went back to the very beginning of XRP, you'd see both these orange and blue lines spending a pretty equal amount of time above or below zero. So when you talk about buying low, a real way to analyze that is you're buying low compared to the average trader, not just this is low and this is high and you're looking at prices. The way you should be trading is looking at how others are doing and comparing whether you're in an asset that others are already in pain with, or you're out of an asset that others are already way in profit on and are bound to start losing money on. So you're buying low and selling high in relation to how other traders are doing, because it's a zero-sum game. So short term looks good. You could buy in justifiably here. Long term, still concerning, because any address that's been active in the past year is up an average of 55.5%. That's huge. So there might be a window to see a bounce where we're at now, assuming Bitcoin moves the right direction for the next week. But if you're planning on holding for like months and months or over a year, you might see a little bit of volatility and, mild underperformances because of the fact that it's already given so many profits to so many wallets. Hopefully that made sense.
Yeah, for sure. Interesting. Let's talk about Solana and how that's looking.
All right. So Solana, just a fair warning, we don't have full on-chain metrics, but we do have a few good sentiment measurements like funding rate, which interestingly is showing that there are a lot of shorts trickling in on Binance here. So people are essentially betting against Solana, and this little bounce that we see just in the past 4 days or so, people don't believe in it, and they're actually using this as an opportunity to predict the price is going to go down. And that's a good thing if you are bullish on Solana, because when you see big amounts of shorts like we saw back right before Christmas, that is an invitation for liquidations to happen and boost up prices. On the alternative, you don't want to see a lot of people longing, because that can boost prices downward if they're liquidated. So considering where we're at now, there have been actually a pretty staggering amount of shorts opening up on the biggest exchange in the world. And this is the most prevalent we've seen people betting against Solana for most of the past year. If I go back 1 year, past a year, it looks like this is the most red we've seen here. And that's a very good sign. It means that people are showing a lot of FUD towards Solana at this time and increasing the likelihood of a rise, because if prices rose right now, it would be happening at the expense of retail traders who are trying to profit off of its downfall.
Wow. Very interesting. I'm surprised people are trying to short Solana, but
me too.
That's what it is.
Yeah, and that's Binance. This isn't just some little old exchange. This is the most prominent exchange in the world that does have a lot of sway in terms of what funding rates do to the price.
Okay, so let's talk final item here, meme coins. Anything you're seeing on that front?
Yeah, so if we go to the comparison of layer ones, layer twos, and meme coins, we're actually seeing a pretty low level of discussion toward meme coins. And my understanding is this is just a continuation of the jadedness and the worry that people have right now to make the wrong choice. And when they don't have confidence in the markets, usually speculative assets like meme coins are some of the first ones to be ignored or abandoned. So we're seeing that layer ones, let me make sure to switch to Bitcoin here. So it's showing the true layer one social. There we go. So layer ones are getting a lot more traction on the back of Bitcoin, obviously. So they're getting discussed a ton, while meme coins and even layer twos are way back down here. The opposite was true, the week after Trump got elected, and we saw just massive interest in like Trump coin itself and Bonk and WIF and Doge and Shiba and stuff like that, because everyone was just super confident. They actually kind of rode the wave up for another 2 weeks or so before things started to get a little shaky. So confidence in markets from retail traders is quite low, which is a good, healthy sign for the markets, because they're not nearly as greedy as where we saw them 2 to 3 months ago, when everyone was talking about the latest meme coin they should be jumping into.
I'm not a big fan of meme coins, so I'm happy to see meme coins are down. And maybe this is a good sign that we're bottoming out. And I'm not sure the bottom is in, but we are in that process of bottoming out. And the meme coin dying down, the frenzy dying down, is a good thing.
Yep. I'm in 100% agreement with you. I mean, there's room in the crypto ecosystem for everything. And coins' existence and relevance are kind of what traders make of them. But we've seen enough evidence to show that when we see, heavy spikes in meme coin interest, tops are usually right around the corner. Sometimes it's immediate, like back in March last year, or sometimes it's delayed by a couple weeks. But eventually, when you see a lot of greed in the form of speculative asset, like salivation from traders, that's usually a sign where we're getting a little overheated. So it's a good sign that the opposite is happening right now.
Oh, for sure. Brian, always great stuff, my friend. I love going through the data, and it tells a clear picture of what's happening versus, moving by our emotions or our gut feelings, but using the data to form an actual thesis is a great way to approach the markets.
Thanks for having me, Tony. Always a pleasure.